We have seen in the previous session what is the essence of the market cap and we have seen how big is our market compared to the biggest market of the world, which is American Stock Exchange. So we still have a long way to go. How the net worth of any person is created? How do we say that Mukesh Ambani has got 50,000 crore, Anil Ambani has got 80,000 crore, whatsoever? We cannot value their property, right? How can you value a business? He has got hundreds of business. He has got thousands of properties globally. So we cannot calculate their net worth through rough estimation. So what they do is they take the shareholding pattern, calculate the number of shares into share price. By that they derive the real time net worth of a particular person. Hope the point is clear. I've shown you like two companies which are very good in land bank. Elnet at 152, Sovereign Diamonds at 16. These companies have to be bought for the next 2-3 years perspective. Even for long term, the more you hold, the better return you get. Likewise, in the process of training, I would be recommending you lot of companies. The job is just to buy and forget those companies. That's it. You would be making fantastic returns from it. Nasdaq has only IT companies whose net worth is approximately 1200 lakh crore. Dow Jones is 860 lakh crore and S&P is 2000 lakh crore. And yesterday I had given an homework like which are the top 10 companies in India by terms of market cap. Alright. So the first is your Reliance Industries. You can type this question in Google itself. You'll get to know how huge is a company.
Sir, different business segments, right? Irrespective of the business or area, you say Reliance is the top one.
Yeah. In our exchange, in our stock exchange,
Okay.
all the listed companies, Reliance is number one. Even otherwise in India, Reliance is the biggest company.
Okay.
And biggest company in America is Apple. Apple net worth is nearly 180 lakh crore. Reliance is not even 10% of it. So even though we say, oh, Reliance such a big company, market cap 16 lakh crore, but still it is way below Apple. Even Tesla is 100 lakh crore. So this is much lower than their valuation. So Reliance 16 lakh crore company, then TCS 11 lakh, HDFC Bank 8 lakh, ICICI Bank 6 lakh, Infosys 6 lakh, HUL 6 lakh, SBI. Likewise the list goes on. Alright. So if you see the gap 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, HDFC. This is 4 lakh crore, this is 16 lakh crore. Generally the band is not so broad if you look at the companies in other exchanges. This is almost like 4 times. But in most of the exchanges you will see that in top 10 companies the difference won't be beyond double. Meaning if Apple is 200 lakh crore, by here if you see the 10th company, it would be more than 100 lakh crore in America. This is also an indication that in India wealth is not uniformly distributed and India has got lot of corruption. This is a signal of it. If you see in India there are a lot of rich people. Among the top 100 billionaires in the world, at least 15 to 20 names are of India. Adani is the second richest person in the world, but we are not the second largest economy in the world. So that is why they say that in India, our economy or our money distribution is a pyramid. It is a pyramid wherein at the top only few people are there, but they are very wealthy. Maybe because of political support. In the middle, we have middle class, which is average like any other country. But at the bottom of the pyramid, we have huge poor people. That means our per capita income is better. But the number of poor, why it is better? Because there are selected people who are so rich class that when you divide it by the population, it is a good figure. But there are a lot of people in the lower middle class. So money is getting concentrated, not distributed. And this is all the effects of your corruption or maybe some biased business, biased like being affinity to some kind of political leaders and all that. Like they say, Adani is very close to Modi, Ambani is very close to both Congress and BJP. So what will happen is just a matter of time. They just keep on passing the tenders. That's all. Okay. But whatsoever, this is the reason. This is the fact, and we have to live by this fact. There's nothing much that we can do about it. Never ever, very important point now, never ever invest in any of these companies, guys. If you do not have knowledge in the market, then definitely you can. Why? Because imagine a small plant can become very big just by little nourishment. In the initial stages of the growth, companies can grow exponentially. Even our height, if you see, our height grows pretty fast in the young age. As and how we cross 13, 14, 15, the growth reduces, and by 16, 17, totally saturates. These companies are like saturates. However, they may grow, but not exponential growth. Meaning, to grow from 16 lakh crore to 32 lakh crore, it would be very difficult for Reliance. It may take 10 years, guys. I'll give you an example. Say Jio, Reliance Jio. Everybody is now, let's say, using mobile. 90% of India's population is using mobile. If Reliance Jio wants to double up, then the population has to double. Isn't it? Otherwise, something radical has to happen. Vodafone has to go bankrupt or something like that has to happen. Likewise, every segment is like that. When the population itself is growing by 3-4%, how can companies grow by 20-30%? Because they have got talent and all that, we can say 10% they can grow. So these kind of companies, I do not invest even a single stock. You see all these companies list, you won't find even a single one in my portfolio, nor in my client's portfolio.
Sir, excuse me, sir. How did you came to this total stocks? I mean,
In
it's
Google, I
simply-
just searched in Google for top 10 Indian companies by market cap. See here.
Oh,
So what I'm trying to say is that not only India, let's say Google. Talk about Google. Google is 150 lakh crore. Everybody is using Google now. Whoever is using internet uses Google. If Google wants to become from 150 lakh crore to 300 lakh crore, something innovative he has to do. Otherwise, organically, the population cannot grow so much. World's population is growing by just 2.3, 2.4%. So, if on autopilot the business runs, it will take 40 years. But maybe the management has got talent, it may take 20 years. 20 years you are doubling your money. I would say better do fixed deposit. Investing into these companies is as good as doing a fixed deposit. Fixed deposit you can break anytime, there is liquidity, you can get cash at home. Even gold. Gold is slightly better than fixed deposit. Inflation adjusted, you get returns in gold. But these companies, yeah, one thing is sure, that whoever is running this company are sound management people. So let's talk about Mukesh Ambani. Mukesh Ambani, why is he struggling so hard? Why is he doing so much of business? Not to make 8-10%. That he can put the money in the bank and also he can earn, relax and live life peacefully, isn't it? So they want something beyond 10%. That is why they are struggling day and night. So that point I totally agree. That is why I say maybe you can grow here by 10, 15, 20% also if the management has got talent. 10, 15 or maybe 20%. But beyond that, it is not so easy. It is just like you are swimming against the ocean waves. You may be an expert in swimming. But so much of resistance will also be there as you move forward. So these businesses, yes, I would say are very safe also for investment. See, when you are investing into any company, if it is a small company, it is like a speedboat. You can move very fast in speedboat, isn't it? But the chance of accident, the chance of sinking is also very high in speedboat. But if you talk about a big ship like Titanic, it may not move that fast like speedboat, but the chances are that it will not sink also. Too big to sink. The same formula applies even in stock market. When you are applying in big companies, it is like Titanic ship. Not that they do not sink, it sinks, but one in thousands. Like in the history of India, I do not see any company beyond 1 lakh crore which have sunk. No company. So these companies are too big to fall, are too big to fail. Example, take about Reliance only. He has got 10 businesses. Geo, Reliance Retail, Reliance Petroleum, Reliance Infrastructure. Like that, he has got 10 different businesses. Maybe one business will fail. Maybe two business will fail. Somehow he will emerge again. So they are well diversified internally. And secondly, even if there is any problem like Satyam, okay, one company there, Satyam, it was 1 lakh crore which fell down, but it did not become bankrupt. The ship did not sink. What happened? Government came to the rescue. Vodafone Idea was the second company. It was about to sink, but government came to the rescue. Someone is not muted their audio. Kindly mute your audio, guys, so that no one is disturbed. Sri Hari, kindly remain muted.
Yeah, yeah.
So these companies, though they cannot move faster, but they almost are very safe bet, stable bet. So everything comes with a calculation. High risk, high reward, low risk, low reward. But being young, I would say that those who are senior citizens beyond 60 years of age, I would always tell them to invest into these companies. Why? Because instantly you can sell the shares. And that is 10-12% is only what you want. And you cannot bear the capacity of any company losing badly. That means you want stability more than the returns. So senior citizen companies, that's what I tell these companies. These are meant for senior citizens. But we, at this age, we have the ability to take the risk. And risk we are not taking on the entire capital. We are investing, we are boarding speedboats. Not one, but 20, 30. Maybe one will crash, maybe two will crash. Maybe 5 will crash. Maybe 10 will become 0. But the remaining 20, if they move with a high speed, maybe at least one will reach this stage in years to come. That one has to come here, that's it. Even these were all like speedboats 20, 30 years back. They have also emerged from the bottom. So which are those potential top 100 companies of India in the next 20 years? That is where we are investing, which are penny stocks right now. It's a very dangerous game investing in penny stocks if you do not have knowledge. But if your reading is thorough, your homework is perfect, then maybe all of them will turn out to be like speedboats which do not crash. Almost all of them will give you returns. But even then, we have to expect the worst case that 10% of our companies in the portfolio will become 0. Why? Because when the company is too big, government has to come to rescue. Otherwise, it will spoil our India's economy altogether. Lakhs of employees will come on the road. Government will lose votes. That is the advantage these big companies get. Even if there is any problem, government will help them. But in small companies, they think government will not come to the rescue at all. Like so many DHFL company, 4,000 employees were there, sunk, 0. But government did not help because that is hardly going to impact the country. But these companies, yes, have an impact in the country. This is like a face value of India. This is like our image in front of the world. Even in America, government supports. We had the Lehman crisis during recession. Government came to the rescue. Government infused 100 lakh crore in that company, you know. So keep this formula in mind. And you can always do it in case that you do not want to take much risk. 50% you can invest in this company, 50% in the company that I am recommending. But let me tell you very clearly, going forward, you yourself would realize that investing into the companies that I recommended has given much better return than these big companies. But maybe some emergency fund and all that you may need any time, then that part, that is all. See, it is not my, it is your own decision that you have to take. You want to invest 10% in this or 20% in this, 50% in this, that is your decision. But I would, since I don't invest even 1% in this, because I have that ability to take risk, and we have anyway invested into real estate. But those who are only dependent upon stock market, then for them, I would say that according to your risk appetite, 10, 20, 30, 40% you can allocate here. At least 50% of your money should be in the stocks that I am recommending. That you yourself do research with the knowledge that I give you. That is where the real wealth will get created. This is like bowlers, that will be like batsmen. These are all like defensives, they are like all attackers. So real wealth will be created there, but during uncertain times and all, you will see that okay, there is some cushion with this company, because if they fall 20%, this will fall only 10%. So that is how you will be able to balance your portfolio. But you say, no sir, T20 match, all the 11 players I want batsmen. That's how I do. I am that aggressive. So if you have some primary income source, so stock market is secondary income source, then I would say don't invest even 1% in this. If stock market is your secondary income source, meaning you already have a job, you are getting salary, you are able to survive with that. Only extra income you are putting into stock market, only buy the stock that I am recommending. You say, no sir, I have no other wealth, only stock market is my income. This is the way that I am surviving and I am feeding my family. Then I would say, depending upon your risk appetite, whatever the percentage that you want to allocate, you can. Up to 50%. And senior citizens and all, I would say 80%, 90% they can invest here. 10, 20% they may invest into the penny stocks that I am recommending. And you talk about any person, whether Rakesh Jhunjhunwala or you talk about say Warren Buffett or anybody, they did not become rich by investing in these companies. They became rich by investing into small companies. And penny stock doesn't mean that we are going to buy 1 crore, 10 crore, 100 crore company. It will be like 100 crore or 500 crore, 1000 crore like that, mid caps. There's one company which I like, which I also recommended in the group, TRIL. So this one all I would want to recommend. Hope you have noted that point already. So here I am putting down all the recommendations during the trading process. $54. I've already told you that this company has got a monopoly in the 700 kVA transformer section. And due to the crisis in Ukraine and all, this looks like a good bet at least for 2-3 years, not beyond that. The above two companies, more time you hold, better returns you get. Safe. Alright, now market cycles. Very, very important. The first thing you got to know is when you should be in the market, when you shouldn't be in the market. I'll tell you one. When I started my investment in 2006 and 7 somewhere I started. That time I had a capital of 16 lakh. We sold some property and with that money I only invested in stock market. Immediately that after my engineering, I was never interested in job. I wanted to create a fortune in stock market itself. But you believe it or not, My 16 lakh turned to 40 lakh in a matter of less than 15 months. Could not have expected a start better than this. I was totally in my mindset that it's only stock market that I'll be doing in my lifelong. And then came the recession in the year 2007 and somewhere, 2008, and I lost the entire money plus another 4 lakh, 4.5 lakh I had to pay to the broker because that time they used to give funding. So I was very very aggressive in buying in excess beyond the capital. Totally lost money. Then heard from each of my family members, got lot of scoldings, came under depression, and that was the time that there was no work for
Question.
me and then no social
Yeah,
life.
question.
I had to get married. Yeah, please.
And see, when you had a 240 lakhs, okay,
Hmm.
so don't you try to withdraw something
Not
or
240, 40 only.
40, okay, 40.
40,
And don't
16
you
lakh
try
turned to
to
40
be
lakh.
in safer mode and taking something and keep into some other mutual funds? Somewhere, I think.
See, that time I was hardly having any experience in the market. My dad, with lot of experience, he used to tell me, first of all, you don't enter here. But I never
Okay.
listened to him. I'm like, nah, because market was like that. Just like in the last 2 years during Corona time, how the market was rising, like that it was rising that time. So day in, day out, the prices used to rise. Every day 2-3% gains. Every day 2-3% gains. So my 16 lakh turned to 40 lakh. So that means I doubled, all more than doubled my money. What my target was to make crores to buy my own private villa and everything. So like that, it was over ambitious. And then whenever you get over ambitious, that is where the market teaches you a lesson. So then totally sunk, and
So, what is the lesson learned here? So, even
that's what I'm
for
coming back
us,
to. I'm
what
coming back.
we need to learn from you, sir, here,
Yes.
by that experience.
Yes. First, most important point. First of all, we'll write down important notes. Through my experience, and more than my experience, through the experience of the veterans of the stock market who has given their entire life, like Warren Buffett, Benjamin Graham, through the books, that knowledge that I got, I am giving you every point, and these are like the bullet points for your lifelong to be remembered, and to teach your children also. Because going forward, you'll see that your children would be investing in market. 60% people in America invest in stock market. In India, it is less than 8%, but it was less than 3% 3 years back. So stock market will become a common investment among the crowd. Your children would be investing, and we ourselves, like if you see, the figures are increasing exponentially. So this knowledge is going to be useful to you for lifelong. The first point, the risk
So, if
appetite.
you record this and give it to us, that's very nice, sir. We cannot do it outside.
Yeah. I'll give you all these notepad files also, but any important points you
Okay.
feel you can take down at your end. The risk
Okay.
appetite should be high with should be reducing with age. That means as and how your age is increasing, first of all for health purpose. You know, you must have already observed it. The heart gets weaker and weaker as you move on in life, as you are aging, as you are growing. This is a common phenomenon. This is the health hazard, what we can say. There's nothing that you and me can do, it is natural. So today that you want to start a business by taking 1 crore loan, you will be able to do it. But tell anybody under the age group, like our parents and all, borrow money 5 lakh also, they will hesitate a lot. First is the ego thing. And secondly, they will not have the ability to take that risk, and even if they take it, they will not be able to sleep, even if it is 1 lakh loan. So what I'm trying to say is that as we are aging, our risk appetite will automatically reduce, and accordingly we'll have to adjust our portfolio also. That is why if you see the mutual funds and all that, they are differently classified: senior citizens fund or stable fund. And even if it is a fund advisor, you approach any fund advisor in the world, he will first ask what your age is. If you have zero knowledge about the mutual funds and all that, He will first ask your age and then accordingly he will give you some 4 5 funds to invest. And you will see there that he is automatically balanced it with the large cap, with the debt fund, with the small cap equity like that. The portion of small cap equity fund will keep on reducing. There's a simple thumb rule. In stock market, there's a thumb rule which says that if you're, according to your age, if your age is 20, you invest only 20% in large cap companies. Your age is 30, you invest only 30% money in large cap. Your age is 40, you invest 40% in large cap. This is a general thumb rule. Because as that you're aging, you are automatically reducing your risk. So the risk appetite should be reducing with age. Okay. Point number 2. These are all universal formula. Larger the company, stable stable is the investment and so the returns, and vice versa. Never borrow money to invest in markets. I've seen with my own students, forget others, even after training. They borrow money to invest in the market. That is very bad. Yes, you can do this, what I'm saying. What is that? You take loan against shares. Let's say that you have a portfolio of 10 lakh and you want to buy a house and there is some 5 lakh shortage, or you want to buy an HMDA plot which is coming under a chance, or you may require funds in emergency. Then you can take loan against shares and put that money not in stock market but for your needs, other needs. So loan against shares can be taken, but don't take a loan to invest in shares. Never borrow money to invest in market, though you can apply for loan against, because the interest rates are very low. You only have to pay not EMI but only interest. Like I have myself taken loan against shares to buy some plot. So let's say I've taken 20 lakh loan. I have to only pay if I'm using that fund. Point number 1. It is like an overdraft. The balance is there in my account. If I withdraw only 1 lakh, I have to pay interest only for 1 lakh. If I withdraw 3 lakh, I have to pay interest for 3 lakh. If I again put 1 lakh, then I have to pay interest only for 2 lakh. So every day to day basis it is calculated. And it is not EMI that I am paying. I'll be only paying the interest component, which is 16,000 if I utilize the entire amount per month, only 16,000. So that is how you can do it. And for that, we are already tied up with Yes Bank. Like I am having an account in IIFL, the franchisee account. That's why I tell you that open Demat account under me so that I can monitor. So 2008 itself I got associated with IIFL. So the relationship is good, and there they have tied up with the Yes Bank. So anybody who's applying for loan against shares, Yes Bank is offering for the lowest price, and with us the interest rate is further 0.25% less. And with least paperwork, automatically your portfolio will get connected through IIFL to Yes Bank. There is hardly any paperwork that you have to do, only one signature, that's it. So I would say that everybody to do this, apply for loan against shares and let that money be there in the bank. You don't use it. And never use that money in stock market. Never. So let that money be there. When opportunity comes, you withdraw. Otherwise, you leave it like that. You are not going to be charged even 1% interest. Only when you use it, and how much you use it, only for that, not EMI, only interest is charged. Even if you have Demat account elsewhere and all that, any time that you need it, you can always contact me. So never borrow money to invest in market, though you can apply for loan against shares to use the funds other than market. Don't come under a debt trap. Some people, they are applying for loan against shares. With that money, again they are investing in market. Again they are applying that shares for loan. Again they are investing in market. That is what is Lehman crisis, What is subprime crisis? The same thing what I am telling you now. Let's say I have 20 lakh portfolio. I have given it to the bank. I got 10 lakh loan. That 10 lakh I bought another shares. Again I have given to the bank to apply for loan. I have got 5 lakh loan. That 5 lakh again I have bought shares, given to the bank, got 3 lakh loan. This is what is called a subprime. Here what will happen is one day the market falls, everything will go to zero. Because banks will say that your shares price has fallen, please give me money or others I'll sell your shares. Loan on the loan on the loan. Most dangerous game. Either you crack jackpot or you are totally on the ground. That is what Lehman Brothers did in the year 2008. And that led to such kind of market crash that the entire world has to face it. So never ever borrow money. In fact, I would always recommend that stock market should be a secondary income, not primary income. That means stock market is not for you to work and make income, but for you to save money. Money works here, not you. Let the money work for you. And from where will you get that money? From some primary source, either job or business. Firstly, you have to focus on either job or business. From money what you're earning there, after the entire expenditure, whatever the savings you have got, that savings money should only be invested in stock market. But you say, sir, I don't have any job, I'm not interested in job, I don't want to do any business, I only want to do stock market because here I can work from anywhere. 90% people fail in this business. Let me be very honest and blunt. If you are thinking about it, it is some people with years and years, decades and decades of experience, and my own experience and my dad's experience that I'm telling you. Please drop this idea of only be depending upon stock market for income. They should always be secondary only. Yeah, in case you have created multi-crore wealth and you have huge properties in land, you have huge money invested into real estate, you have already got some other income sources, like maybe you have given money for loans, making 1%, 1.5%, 2%, whatever, then that becomes your primary source. This becomes your secondary source. That is also okay. But end of the day, what is most important is that stock market should be a secondary income source.
Sir, one more question.
Yeah. Yes, please.
Some of the people, okay, they're doing stock market maybe a long time, but what they say, what they're doing, simply example say, morning they will when they in and when they out, right?
Hmm.
Simply they will invest some money and is either dollars or rupees, whatever it is,
Huh.
and within maybe some 1 or 0.5 or 1% something is increased, right? Immediately they will close it.
That is called as
So what
scalping.
is that?
Scalping.
Okay.
Short term trading is called as scalping and intraday trading. If you are purchasing anything and selling it in few seconds or minutes, then it is scalping.
Okay.
You are buying it and selling after few hours within the same day, it is called as intraday. We'll discuss all that.
Okay.
Stock market should always be secondary income source and never primary. Here, only the saved money is to be parked. See, why we are parking here money is because we are not getting good interest in banks. We want to beat inflation. We want prosperity. Now, there are people like Rakesh Junjunwala whose primary, secondary, tertiary, all income source is only stock market. But his net worth is 30,000 crore. Even if market crashes 50%, he'll still be richer with 15,000 crore value. And he has got lot of properties in Mumbai. So this thing doesn't affect him. Even Warren Buffett, primary, secondary, tertiary, all stock market only. Nothing he has done in life, only market. But look at their capital size. So we have no match with that. Okay. So always make stock market as your secondary income source. And then the risk appetite, okay, larger. Okay, as and how I get more and more points, I'll be adding out here. Coming back to the market cycles. The first and the foremost thing what you need to remember is, okay, let me complete the story. So I started with 16, I turned it to 40, and then my account got into debt because of the recession crash. 2 3 years, no trading, nothing. Forgot stock market, came in depression. But that interest in the market was there. I said that if I don't have money, at least I can get the knowledge, right? My only question always was the problem there was I did not have any knowledge about macroeconomics. Micro. What is macro and micro? Macroeconomics means global economy knowledge. Micro knowledge means within the country's knowledge. I did not even touch the subject of macro, but I was very much interested in the economics of the micro. So even that time while I was investing, I used to read lot of articles, and my decisions were almost every time that I invested into stock, it was almost at the right time. So domestically, economy reading was very good, but I did not know what impact a recession in America would create on India. Even when the market was falling, I was aggressively buying like a fool because I thought India has no problem. Problem is in America. Why is India falling? India is growing by 10, 11, 12% GDP, and in the budget and all, the Manmohan Singh has like announced lot of reforms. Every type of booster dose was there for our economy. There was no issue at all. Even now I say there was not even 1% problem in India that time. In fact, we had to grow like anything. But then I realized through macroeconomics that no country can be saved. If there is problem in the mother market, America is called as a mother market, then the world has to suffer. I'll give you an example. Why that effect in India had come? This is all chain reaction, We say that if the grass is cut in a jungle, tigers will not come. That means tigers will also disappear. If the grass is cut, tigers will also disappear. The question is, tigers don't eat grass. Then why is that the tigers are disappearing? Because who eats grass? Herbivorous animals. And who eats herbivorous animals? Tigers eat them. So like a food chain, what we learnt in our science, this is also a chain reaction. Stock market is a chain reaction. So let us talk about IT companies. TCS, Infosys and all that. These are all the famous IT companies in India with lakhs of employees. 5 lakh, 6 lakh employees each of these companies have recruited. Their 50% business is coming from America. If America is under crisis, definitely their spending will reduce. If their spending reduces, these companies will fire the employees. Their profits will fall down first of all. They'll fire the employees. Their margins will fall down. They will not be able to get good contracts. So with that, what will happen? It will, like if the wealth in the hands of the people is taken out. You were making 40, 50,000. So what you were doing? You were planning to purchase a car and land and everything. Now you will not do that. So what will happen? Automobile industry affected, real estate industry affected. Again, employees are there also. Again, their salary is also reduced. So likewise, a chain reaction comes and everyone faces the heat of it. Entire Amirpet Training Institute's business fell down like anything. That is where I started the digital marketing and all that during that time. So entire Amirpet business fell down. Simple training institute, even with 10, 20 students, they were also facing the heat of that recession there. So this is the magic of the cycles. Atom bomb, nuclear bomb, this is also all cyclic. Don't think that one bomb will destroy the entire city. That bomb, one explosion doesn't destroy it. When you drop an atom bomb, there is a big explosion, but maybe only few hundreds of meters explosion radius. But wherever these particles come out, that particles will again act like a bomb. Again, some hundreds of explosions will happen. Again, from there, some particles will come out. Again, thousands of explosions will happen. Again, from there, the particles will come out. 10,000s of explosions will happen. Now, that explosion on explosion will create a chain reaction. That is how so much abundant energy is created. That is what is the fission and fusion even in sun. So, this cycle and chain reaction reading is very, very important in market. War is going on in Ukraine and Russia, between those two countries. India's got nothing to do with it. In fact, all the Indians and all, most of them have been evacuated. And someone who is staying there is willingly staying there, but government has already provided provision even today that any time that they want to come to India, just they can fill the form, or they can fill the form in the through the app, and they can within next day they'll be getting the flight. So there's no problem to India at all. But in the last 1 year, Indian market did not perform well because the world market is not performing well. So whether you like it or not, we are also dependent upon world economy. A company even like Colgate toothpaste also face the heat. Now you may say, sir, what the hell this Colgate toothpaste has got to do with the recession? IT companies I can understand. Why the Colgate toothpaste business is falling? I'll tell you why. See, this is what knowledge you get when you read the books and all. Even with 10-15 years of experience in market, I would not have got this knowledge. That is why books is very, very important, and in case you are interested in reading it, I think more than 1 lakh I have spent on reading books. I have all the PDF files, some scanned and some downloaded, some purchased. If you are interested, I'll share you that Google Drive link. So, in case you have patience, otherwise everything I'm covering in the training, what is important. But if you want to be documentary, you have like lot of interest in all, word to word, line to line. If you want to read it, then I can share with you. You can just send me a message on WhatsApp. Now here, how come a company like Colgate also faces the heat? I'll tell you how. See, this is our natural tendency. You know what will happen if your salary is 1 lakh, or forget salary, let's say your bank balance, your portfolio value is 1 crore. What you will do? You'll be happily spending. Even you find a beggar, you'll pay him 20 rupees. Because you know your bank balance 1 crore. Good. My portfolio value 1 crore. You feel yourself wealthy. Though that is value, you did not book it. It is not cash in bank. It is just the value of portfolio. So like that, your spending would be increasing. You will be going with movies with large size popcorn and all that, spending lavishingly, going to premium restaurants, going for a trip, abroad trip, international trip, and even local. You'll be taking some premium hotels. But automatically, that bank balance reduces by 50%, 50 lakh. What will happen? Everywhere your mind will be set cost cutting, cost cutting, cost cutting. You won't go in Uber, you'll go in auto. Even early morning when you wake up, you know, this is fact. When you have a, if you are come from like with a variation of the wealth and all, when you have lot of wealth, you'll be able to like easily take, you won't even bother how much of toothpaste you're putting on the brush. But as that you see that the net worth reduce, array my 1 crore value of the money, or the business value, or maybe the stock value has come down to 50 lakh. Even toothpaste, you will take it very, very judiciously. You'll take only a little. That has got nothing to do with how much of difference would that bring here. But everywhere your mind will be set. How much your possible I should do cost cutting. You'll go movie only once in a month where you used to go twice. You'll prefer going by metro rather than car. You will try to avoid trips. Rather, the confidence, the consumer confidence will also reduce. That again creates a ripple effect. So recessions are very bad, you know. With explosion, another explosion. With explosion, another explosion. So like that chain reaction makes it very, very bad. You know, there is some game called a Jenga. What is that game name? I don't know. But the kids game. Some blocks of your furniture are there, woods are there, and they remove it one after the other. And they have to balance it. And one wrong way that they pull it out, the entire thing collapses. Economy is also like that sensitive. You know, that's why Sensex. Sensex means what? Sensitive index. Anywhere bomb blast, market crashes. Anywhere terrorist attack, market crashes. Problem in America, market crashes. War in Ukraine, market crashes. There are 1,000 reasons for markets to fall. But there's only one reason for market to rise. What is that? Stability, stability, stability. A hurricane comes, some kind of natural calamity comes. Anywhere, not only in India. So market is very, very sensitive to any kind of news. The World Trade Center fell down, our market hit lower circuit that day, you know. Osama bin Laden is planning an attack in America there, and the building is falling there in America, only one single building, but here the market is overreacting. But that is how market is. You can't control it. The panic gets created very fast, just like a fire in a jungle. The panic in market is created pretty fast. That fear will come very quickly. Why? Because lot of people in markets, they borrow money and they invest. When they see that the price is falling, at least we'll able to take out our capital. Like that, they'll run away. So that is why only put the money that you have in spare. Never borrow money. Then what will happen? These small falls and all 3, 4, 5% bad news. See, Ukraine, America, the Ukraine and Russia war is going on. But I never recommended anybody to sell the stocks. In fact, I'm buying. Because someday it will settle. You are seeing that the war is happening. I am seeing that the war has already happened for 200 days. How much more it will happen? That is the way that I look. And that is what big investors say. They say that lot of times the market has already discounted. Lot of times the market has already discounted the bad news and you won't even realize it. So when the war started, that time market already fell. And a very beautiful saying, the point must noted by Benjamin Graham and Warren Buffett. Warren Buffett guru is Benjamin Graham. Put all these points in double quotation in your mind, you fix it. Market does not crash twice for the same reason. I'll tell you what. When the war between Ukraine and Russia started, market fell like anything. 15%, 20%, globally markets fell down. Our market also fell down. From 18,600 we came down to 15,000. After some 30, 40, 50 days, again a news had come. Russia is going aggressive on Ukraine and they are planning an attack near the nuclear center. Market was rising. Since then, in the next 150 days that it has happened, market did not fall for that reason, maybe for some other reasons. But Ukraine, Russia, every day headlines. Or India is calling back all the citizens. China is saying to evacuate Ukraine. Then there may be clashes between NATO and Russia. Now market will not crash because of the war. So how much your bad news on war may come, general public, those who are inexperienced, they will definitely sell. They will be reading the war news every day. War news, war news, war news. Or whatever the worst news may come. Okay, until and unless there is a nuclear attack and all that. But it's not so easy to say. Clash between NATO and Russia, I don't think will happen in our lifetime. Nuclear disposals, I don't think will happen in our lifetime. It is only just to show power that, okay, I am also a powerful country. Just to create fear. These are only for display. They use it, the world will go against them. Forget America, no country would like that. Even India will go against Russia if that happens. That they are also well aware. And not that they will not react. If they put, then the other countries will also react. Na? So market is not going to crash because of any severe effect between Russia and Ukraine until and unless there is a power of nuclear use or there is a clash between America and Russia. Then that becomes a different topic. Ukraine, Russia is discounted. But something like Russia and America happens, then again market may fall. This is example 1. Example 2 I'll give you. Corona. When the Corona had come, unprecedented fall. Even I did not see such kind of sharp fall in recession, that much fall I have seen here. 60% index wiped off in a matter of 1 month. Not only in India, globally, I have seen American market hitting back-to-back lower circuits. Entire world came under a lockdown. Entire world. Never we may see this day in our life. And this is not there in any books also. World War I, World War II, how market behaved, we know. That is why I say a market is always new. Even Warren Buffett says today also I am learning from the market. That's what he says. Such an humble statement. A guy with 70 years of experience is saying that even today I am learning from the market. And that's how we all will die as a learner only. How much your books I may read, how much your videos I may see, even today I am learning. But these points are golden points to remember. This will improve your psychology. Psychology is very important for the market. Market fell, market crashed, and hell thing happened. But you have to think other way. See, thinking differently will only give you money here. You think like an ordinary person, you will lose money here. Out of panic, people sold the stocks like anything. They should have sold before, but they sold after the market crashed. And intelligent people, they kept on accumulating in panic. Then what happened, Worst news came. What is that worst news? That so many people have died. 10,000 people are dying every day. 3 crore cases are coming every day. You know what market was doing? Rising, rising, rising. Worst of the worst news came. China again lockdown. India again lockdown. Market rising, rising. Banks totally will come under NPA grip and it will be very difficult to recover the loan. Market rising, rising. Why? Because that all bad news market had already discounted in the first fall itself. So always remember, market does not crash twice for the same reason or same major news. Same reason. See, these all points will come in your mind in your investing process, and that time you'll say, what will happen, generally, because this happens in my social groups among my friend circle also. During the corona time, when market was crashing badly and then there's a severe bad news were also coming, but market was reacting positively. So I was pretty clear about this point. I said that do not think that market will crash again. Those all friends, all of my friends, not even a single guy was supporting me. You are crazy, Sanjay. I don't think that you are having so much of experience in the market. Total world is under lockdown and you're saying the market will rise. It will fall very big. You just see what kind of news will come now. In fact, worse news came. And I said that news may come. I agree. But market has already seen a bottom. Today they have the answer. Today they all say, how is that you could tell? I did not say even a word to them. But the answer is here. The same thing happened even in war. Lot of students started posting me, sir, I don't want to invest now because there is war going on. Let war settle. After war settles, you'll find index at 19,000. I said that don't fear about the war. One fear has already come. Second fear will not come in the market. For one news, only once that fear will get created. One news, only one fear. Keep this point in mind. Yes, market will react when the news is fresh. The news gets older, the market stops reacting. So even if you are searching every day what is happening, because this I see even in business channels, CNBC, TV 18, Economic Times, everywhere, they are saying that the market will perform according to the tensions between Russia and Ukraine. Totally flop statement. If you are investing by reading paper and by watching news and all, you will never make income. Those guys will create fear. That's where the market will start rising. Okay, hope all the points are clear till now. Now, market cycles. Had I got this knowledge, maybe today I would have created exponential wealth with the capital that I started with 16 lakh. Because market cycles can tell you to an extent when you have to get out. Had I got this knowledge, I would have exited by the time I made 30, 35 lakh. I would have exited. I would not have waited in the euphoria stage of the market. That was the time to exit, and I was like a foolish taking loan to invest. That I realized it after reading the books. For market cycle, the best book is Templeton Way. Invest in Templeton Way. The book name itself is Market Cycles. Excellent book. There are couple of more books, but only one big patience if you have it. Then read the book by Sir Templeton. The Templeton Mutual Fund is he is the founder of it. So in market cycles, he very beautifully describes that this is automatically an inflation cycle, this is automatically a macro cycle, this is automatically a micro cycle, and this is automatically a stock market cycle and bond cycle. Everything is cyclic in nature. Just like how we have day, then we have night, we have got happiness in our life, then we get sorrow. Like that, market also has got a cycle here. There are times where you should not remain invested 1% also. That kind of bad phases also come in the market and they stay there for at least 18 months. During that time, you should not put your money. In fact, I myself would be planning to exit totally. Even your mutual funds, you have to exit. People don't do that. Yeah, 90% we remain invested. That 10% bad phase of the market, if you are able to get out, then only you'll be able to compound your money, Your 100 you have made 200. You don't get out, that 200 will become 150. You'll still be happy that 100 has become 150. But if you get out at 200 and after it becomes 150 again, if you re-enter, then is when you create the real wealth. When the train is about to start, enter. When the train is about to crash, exit. That is how you have to do to cover maximum distance in shortest time. So this market cycle will teach us. Let me just show you the glance of it because we are already done with the time. Then Monday would be Diwali, so Tuesday will be carrying forward from here. So this market cycles life, the duration is between 15 to 25 years. Everything is prepared by me. Content I've taken it out from the books and everywhere, but everything that I've prepared myself, word to word, I've typed it. This is the market cycle which goes on for 15 to 25 years, and it is not today. It is a 600-year record. Since there is something called something was like currency. Since then, this is what is the pattern observed. See, this is the specialty of the big economists, PhD in economics in America. The knowledge what they give is from the historical books of 100, 200, 500 years also. So this is the natural cycle. So here, market starts from the pessimism phase. In 15 to 25 years, later I'll explain you each of this cycle. Okay. So pessimism phase means market rises very slowly, it rises on an average by 5%, 7%, 8% in a year. If you buy quality stock, 30-40% you'll hit. I'm talking about index, the large cap company like Reliance and all that. So the movement is very, very slow. Here the economic news is very lackluster. That means you won't find good number of job openings, no real estate boom, nothing would be there here. Only something is going on, just going on. Neither good news nor bad news about the economy. There may be a bit of bad news only, but good news will be missing. Inflation under control, everything would be under control. There's no excitement in the economy. Then what will happen? The market is showing excitement, economy is not showing excitement. Economy is still lackluster, but market is signaling you something. See, market is much advanced than what you think. The problem here in investing with the beginners, I'm telling you again a golden point. Note it down. Very, very important. So let's say Reliance Industries did not post good results. What will happen? People know, they read the paper, they read the news in the WhatsApp and the push notification. Array, Reliance Industries profits fell down by 20%, bad results, and they sell Reliance. And what will happen? They'll surprise, Reliance price will rise. Array, this news, the smart people knew it 1 month back only. The chartered accountant, Ambani friends, Ambani family members, fund managers, whoever are close relatives to Ambani, with tons of money that they have got, they have already sold that time. And they say that bad news has come, let us now buy. And what you'll be doing? You'll be doing opposite. Who wins in the market? The smart guys. So do not ever trade with news. It is impossible to trade with news because market knows what is going to happen before only than you think. We are the last one to get the news. Example is Corona itself. Market crashed and everything. Even when the worst news did not come, the lockdown news came later. If you observe it, when you are free, this is the homework that you have to do. Okay, I'm giving you an homework. When did lockdown start in India? You have to find out the date when the first lockdown started. When did the I'm talking about the announcement what Modi made na, one fine day in the evening 7 p.m. he said that India is coming under lockdown. When did first lockdown start in India? Is it a good news or bad news for the economy? It is the worst news, right? And what and how did index index react from that day? Market already fell down. Modi knew it. He must have conducted 100 meetings before announcing lockdown. Those all economists, big businessmen, Reliance, Ambani, everybody knows what is going to happen in India 1 month in advance. Only they knew it. The police department and everybody, military department, all of them were issued notice. Get home fast. India is planning something big. And secondly, this also you find out when demonetization happened and how did stock market these two things, this is the homework that you'll have to do. So what we see and what we are hearing is all very late, understand this point. And smart players, they are not waiting for the news. Do you think a person who has got 1,000 crore will be reading the news and then trading? No, he will be little advanced. He'll have friends of that size. He'll have friends of who are Mukesh Ambani friends maybe, and he'll get to know before only from the management, from Ambani's son. Arey Hanna, how is the business going on? That's how his friend circle would be with tycoons. He'll inform you before only. Don't buy my shares, something bad is going to come. That's all. One signal he'll give. This guy will print millions. Their own family members know what is going to happen. We don't know. We are playing blindly. They are playing openly. Imagine the three cards game. All of them are putting the same stake, but you are playing blindly and they are playing openly. Who will win? They will win naturally. So that is why the news and all, I say that don't even read it. Don't watch any business channel. Don't uh, believe in any WhatsApp forward message or anything like that. You play smartly with your own conviction, with your own mind. Then only you'll be a winner. I never ever trade according to the news flow. I used to do it long back, lost lot of money also. But since then stopped it and my graph improved. In fact, I sometimes take opposite decision. If the worst of the worst news comes and the price crashes, like example, which I did, recent example is Vodafone Idea. Also, one more homework to you. When the Vodafone Supreme Court statement had come, like this live class, I was taking an offline class, I still remember. 4 students were there in the class. The price of Vodafone Idea crashed to 2.4, 2.56 rupees something. The worst news came and the price crashed. Then everywhere there were headlines. I have mobile app, generally I use that. 4 business channels I watch. If the same news goes in 4 business channel, I do the opposite. Everywhere breaking news, Vodafone Idea finished, Vodafone Idea finished, Vodafone Idea finished, 70,000 crore loan, you will not be able to pay, Vodafone Idea finished. Price started climbing 2.4, 2.5, 2.6, 2.8, 3.1, 3.2. I told buy as many shares as possible. I bought 70,000 shares. Had I got more cash, I would have bought more. The price from there doubled in next 1 month. I want you to verify all this what I am saying. Price doubled in no time. And everybody started saying, Arey, Supreme Court is giving bad news and the price is doubling here. Those guys already know it. What is going to be the decision? Those judges' friends or the business tycoon, they already knew it. And in that panic, we sold and they bought. So anywhere a panic is getting created, you think like this: okay, everything got discounted now. Now what is left? Everything got discounted now. Now what is left? Like this, you have to think. That is rational thinking. Only will work in market if you want to be a winner. You say, no, sir, according to news only I will trade. If the news is good, I will buy. If the news is bad, I will sell. You will lose money. Take it on writing. Yeah, until unless there is a surprise. Let's say that earthquake happens and then the market crashes, then that is genuine. That no one can predict. That I believe totally. The news, if you look at the chart, technical analysis we are going to do, if you look at a chart, you'll get a hint whether this news is already discounted or it is a fresh news. If it is a fresh news, for some time it will definitely react. But if it is a news which can easily be known, like say company results and all that, it can be easily known. There's nothing hidden in it. The Supreme Court order and all, we know it later, but those people, they already know it since months and all. So under that kind of news, if you see panic, you have to take courage and go and buy. Same thing happened even in Mahindra Satya. That time I did not take that opportunity, but that example had come in the books that I was reading. When there was a news that Ramalinga Raju has confessed that he has done a big fraud and all that, the price of Mahindra Satyam, that time it was only Satyam, came down from 400 rupees to 7 rupees, guys, 7 rupees. I was totally fearful. Neither I bought nor I sold. I did not have any shares also, but I was just observing. But I've seen lot of people, my brokers, I have like the stats of all the India Infoline customers of India through my relationship manager. He said that, sir, people have booked heavy losses in Mahindra Satya. But somehow, as the statement goes now, that time is where I was also reading the books and all. That big ships don't sink easily, government supports them. And there was little bit of statement also that government is coming, Ram Nair is appointed LT chairman, everything. I was confident, though I did not have the courage to buy because I did not have complete knowledge about that. But I was pretty sure that this company is not going to sell. And price from there went to 8 times. 8 times price increased in 3 months. This is also an homework that you can do. This will give you, that kind of maturity and experience in stock market, which you would have known this only after 15-20 years. That is why in every field experience is required, but in the stock market, decades of experience is required. Till you do not spend 25 years, you don't even know what market cycle is. Forget everything. A person with 70 years experience is saying market, he is learning something. That means imagine how complex it is, how difficult it is. That is why people fear from the market. That is all. With this note, I end. So our next class is going to be on Monday. Tomorrow would be holiday. Sorry, Monday is Diwali. So Tuesday. We are meeting again on Tuesday. So you have got ample time to do the homework. And any doubts, questions you have got, you can now make use of the audio control or the chat window.